Beyond Meat climbed more than 840% after its IPO. In the last year, though, it's down more than 68%. Some people may see this as a buying opportunity, while other short investors, including Jim Chanos, see a sinking ship. In today's video, we get into the details of Beyond Meat's gross margins, the bull and the bear case for this equity, whether or not they're like the company Peloton, and a whole lot more. Stay with us.
I'm Hannah, this is Erin, and you're watching the Piper Rundown. We analyze business and culture to help you win. Today's rundown is presented by JetStore. JetStore has been providing affordable, reliable, and easy to manage data storage and cloud solutions to over 4,000 customers worldwide for more than 26 years. That's longer than I've been alive. They can handle zettabytes of storage. Check them out at jetstore.com.
Beyond Meat is down about 68% in the last year. Now, that is not particularly out of bounds in a market that we've seen sell off over the last 2 months, partially because of the Russia-Ukraine conflict, partially because of indications by the central banks that interest rates could rise, and that considerations for all growth stocks across the board needed to be taken into a different perspective. Facebook is down significantly, Peloton is down significantly, and there are bulls that remain in the perspective that both Peloton and Facebook, now after these corrections, represent buying opportunities. Some people may make the decision or come to the conclusion that Beyond Meat falls in a similar bucket. It was a growth story for a collection of years, and that Beyond Meat, which was at one point trading at a $6 billion market cap and is now down to a $2.8 billion market cap, is poised to bounce back. This video is about primarily why I am skeptical of that conclusion and some of the evidence to support that.
You're also a little skeptical of the product.
Well, that is one of the pillars of the argument. But that's actually not what we're going to start with. We're going to start with the fact that they are burning cash. Have you ever set a pile of cash on fire?
That's a horrendous thought. Never.
Because Beyond Meat does that on a daily, weekly, monthly basis.
Yeah.
That's part of their stuff.
Quite a visual we're starting out with here.
In the first half of 2021, they lost $170 million.
Okay.
And they did that, and part of the argument was to build up inventory. And that's actually very similar to one of the things that has caused the market to throw stones at the Peloton business model, was that Peloton over-invested into this inventory of the perception that they needed to get more overpriced bikes out the door for people. The difference is, do you know what happens when you produce a bike, Hannah, and then it sits in your warehouse?
Not a whole lot. I don't.
Exactly.
Yeah.
The bike still is functional outside of some maybe basic minor maintenance a year later. Do you know what happens to a food product when it sits in your warehouse for a year?
Just rot? I don't know.
They have 9 months inventory in advance of these Impossible burgers. I keep calling them Impossible. They're Beyond Meat. It's the same bullshit.
Beyond Meat, sure.
It doesn't hold on the shelf in quite the same way.
Nah, bro.
So advanced inventory for a product like this, very, very different than hardware and other hard goods. We can agree on that.
Sure. I am like kind of surprised that, granted, 9 months, long time, but it's like, it's fake food.
It's highly processed soy.
Okay.
Highly processed soy products, soya oil, and peas. Pea protein.
Delectable.
More sodium than conventional meat products. We can just point at a beef patty. They'll put it side by side and say, look, you know, the protein's so similar, the sodium, these other things are so similar, way more sodium, and just way more processed food.
Yes.
One of the business models for Beyond Meat is to sell through other existing restaurant chains. So they've announced partnerships for experiments with Dunkin', with Taco Bell, with McDonald's, to sell this alternative to real meat product with the claim that it's climate preferable, or these folks that are, you know, going vegan, going vegetarian for whatever ethical, moral reason. And they're then able to basically be this wholesaler of highly processed soy for people to eat. And that's going to be, a B2B business model versus a B2C business model.
Sure.
Allows these opportunities to scale. They can have a brand that isn't necessarily competing with these top shelf quick serve restaurants. Despite all that, and them scaling to more than $400 million in annual revenue, which is what they did last year, a little over $400 million, they are still losing oodles and oodles of money because what is the presupposition of all those places I listed? Dunkin', Taco Bell, McDonald's. When you go there, what is your thought, your framework as a consumer?
Well, it's not necessarily health.
Right, but from a cost basis standpoint, on the spectrum of meals.
Cheap.
Cheap, easy, quick, right?
Exactly.
So you're not able to in any way, shape, or form position this as a premium product. It has to be able to be produced at an enormous volume, very inexpensively, in order for it to make sense to be on the McDonald's menu.
Right.
Nothing on the McDonald's menu is premium, and that's not me casting aspersions. It's one of the best businesses ever.
Yeah.
But that's how they think about their food stuff.
Sure.
So Beyond Meat has to produce it at a enormous scale, and what they claim, if you look at their accounting, is that they are able to do that at a 14% gross margin. Now, often on the show we talk about net income, and this is a great episode for us to discuss the difference between a gross margin and a net margin. A gross margin is fundamentally what is the cost of getting the product or service to the customer and the client. The fulfillment, if it's a service, what are the human hours, the software costs in order to execute the service for the client? If it is a product, what is the cost of everything that goes into that product getting on the shelf to be sold or getting into the refrigerator at the McDonald's so that they can sell it to one of their clients? Right. Now, there's two ways to calculate, and the reason that gross margin is interesting is because if fundamentally gross margin is broken, you can't fix it via net margin.
Okay.
You'll never have a positive net margin, which is where your actual profit comes in, because you have your administrative costs, your other costs out there. You'll never make a profit if the gross margin isn't good. But people will lose that if they're, well, we're losing money, but it's because no. Is the gross margin good, or is it not? And then I'll figure out the stuff downstream of that.
Gotcha.
They claim that the gross margin is 14%. However, there are two ways to calculate gross margin. One is your revenue minus your cost of goods sold. That is simply saying, what are all the inputs, what are all the costs if I had, I'm trying to think of a really simple product here. I'm selling tires. Okay. What is the cost of the rubber and the forming of the rubber into the shape of the tire? Okay. That's my cost of goods sold.
Great. Then
there is cost of sale. Cost of sale is, what if I say I'm gonna buy the tire from you, Hannah, and that's it. I'm willing to pay you $10 a tire, and for you it costs $8 to produce the tire, but I'll pay you $10 conditional on you shipping me the tire. I'm not paying for shipping of that tire. If it costs you $2.50 to ship the tire, then you're spending more than $10 for me that would cost for me to pay you.
$10 is a very cheap tire.
For the simplicity of the example here. So what that allows for is the obfuscation of a gross margin. If you only report cost of goods sold and not the cost of sale, you're not including the shipping that you're taking that is incumbent on selling the tire. And so therefore, someone looking externally would say, oh, there's a profit, there's at least a gross margin there, we can figure the other stuff out. Not the case. They use cost of goods sold, not cost of sale. And inevitably, an enormous company like a Taco Bell, like a McDonald's, like a Dunkin', has the leverage with which to say to a provider, hey, we could go to Impossible Meats, we could go to any of these other upstart alternative meat producers who might potentially give us a competitive rate and be willing to pay for shipping. So there's gonna be costs to the sale. They instead roll their cost of sale over into G&A, general and administrative, which is a kind of very common after gross margin in the net margin calculation. A nice way to gin up your gross margins and make you look a little bit better. So there's, I don't really know how many reasons we're on here. They're burning cash like crazy. Their gross margin ain't their gross margin. And the product is gross. It has seed oils in it. It is something, put this picture up. This is of the pandemic. I don't know if y'all remember when we've had different issues with grocery stores and stuff not being able to stock their shelves. All sorts of stuff was missing in the middle of March 2020. This picture of the meat section and every meat being gone except for the plant-based alternatives tells the story to me in terms of what the end market demand might be for this product if in a pandemic, when people are emptying the grocery store of product, your thing isn't being sold. That tells you something about the ceiling for demand.
That's fair. I think a lot of people are kind of scared of newfangled products in general, not necessarily because they know what it's made. Like I don't think people know that soy or seed oils or all that stuff is bad for you. I think they're just scared of like it's fake meat, you know?
So you would argue that seed oils aren't dangerous?
No. I'm saying seed oils are definitely dangerous, but I'm also saying I don't think the general population knows that.
I actually think, you know that meme where it's like the bell curve and there's the people on either end of the spectrum, the simpletons and the super geniuses? Okay. And then there's the midwits in the middle. Do you know that meme? You know what I'm talking about?
Maybe.
So the beauty of this is that people using very, very simplistic models and the people that have like done all the research, really thought everything through, tend to come to the same conclusions. And it's the people that have only half thought stuff through that end up in these really kind of dumb scenarios. So an example of this is like, I eat Beyond Meat because
it's better for the environment.
It's going to fix the climate. Well, it's like, well, if you have like a proper pasture-raised animal, that's actually how the world has worked through time immemorial, and doesn't actually contribute to extreme climate change. It's only the gross factory farming that you're like actually offering an alternative to. And there's all sorts of other issues with like mass producing a monocrop like soy that is also detrimental to the environment, right? And the people on the low end of the intellectual spectrum would never say that. They just say fake meat, plant meat, gross. Or just literally like they put it in their mouth and be like, that does not taste right. Right. You know what I mean? But at the other end of the spectrum, you kind of have the same conclusion.
Gotcha. Interesting. Okay.
So I just think the product has a cap on it that, you know, regardless of what BS they're going to try to sell you, it just is never going to be, hey, we all eat highly processed soy instead of animal proteins.
Definitely not. It does make me think of what is it, Wall-E? Or no, E.T. It's not E.T. Wall-E, the movie where like whatever population is left, you live in space and eat mush all day, and it's like it's just not reality.
Facts. And the other part of the story here is the growth, right? So what has been hammered more than anything, particularly in early 2022, is companies with growth stories. And Beyond Meat was kind of tangentially in that arena. And so part of the story is, well, you know, these growth ones, they're hit, but they'll come back because, you know, think of a company like Zoom. It's not like it's going away. It has all these kind of, you know, moats and stuff that's set up for success in the future. How much do you think Beyond Meat grew in the last quarter compared to the previous year?
In the last quarter?
So they always do it quarter by quarter. So the last quarter of 2021 versus the last quarter of 2022. This is a growth story. It's a growth company.
50%?
13%.
Oh, okay.
So it's not really growing either, Hannah. And the gross margins aren't so good.
I was not expecting that. Yeah.
So this is just a company that burns money.
Yeah. That's, wow. When you break it down that way, Aaron, it's hard to see it as anything else.
And another element of the market story here is that it has more than 40% short interest, meaning there is a substantial portion of the equity that's being traded that has people betting it will go down in the future. It's one of the most shorted, I believe it's actually the most shorted stock in the Russell 1000.
Whoa, okay.
So some people would say, well, think about the short squeeze that led to GameStop going sky high. Yeah. We get into the meme factor later, who is going to rally around fake meat as the thing that we're all going to screw the shorts and destroy it? Who's going to do that for something that doesn't have any of like the childhood legacy and the memes behind it? I would be very careful about getting into a Beyond Meat position. I know the bull and the bear case always comes later, and I'm jumping ahead of myself. I'd be very careful about adding to your position in your portfolio of Beyond Meat.
That is words of wisdom from Watson, I'm sensing.
Yeah.
I think.
Did we say Numbies yet?
You kind of touched on some Numbies, but if you have more, please share.
They do a little bit more than $100 million per quarter. That's a little more than $400 million per year. Like I said, they're not growing much more than 10% a year, so not really a growth story. Goldman has slashed, and Goldman's people, they're pretty good. Say what you will about Goldman, their analysts are relatively good, and they tend towards optimism, have slashed projections for the company as it pertains to revenue in both 2022 and 2023 because of different headwinds like this. And they're in more than 118,000 locations.
Okay. All right. Interesting. What about the comps, Aaron?
So we're first going to point to some of the biggest meat manufacturers or meat product creators on the market. There's Tyson, there's Nestle, and there's JBS, which is a Brazilian company that makes an enormous amount of meat.
Nestle.
Tyson is actually an early stage investor in Beyond Meat,
Okay.
and they are developing their own meat alternative products within Tyson.
Not surprised.
Tyson, it's important to note, trades at a 0.75 price to sales ratio. So we've talked about other things like enterprise value to revenue. Very similar concept here. Price to sale is the price of the company relative to the amount of revenue that it's doing, the amount of sales that it's doing. Beyond Meat, even now, is still trading considerably higher than Tyson. Tyson isn't growing at 13%, but they're a lot closer to 13% than Beyond Meat is to any sort of growth company.
Okay.
Similarly, Nestle, JBS, Kellogg, all these consumer foods companies trade at like 1.5 price to sales. Certainly not multiples of revenue like Beyond Meat has been doing.
Sure.
We then get into a company like Peloton, $9.6 billion market cap. I referenced this before. They have a similar, we made inventory, and now we really need to sell that inventory problem. Their inventory does not have a shelf life.
Yeah. Yeah.
Then we look at the increasing competition for meat alternatives, because you can still argue there's a mega trend there, even if I'm pretty skeptical of it overall. Impossible Foods was trying to IPO this year. They're not particularly excited about how poorly Beyond Meat's doing, because that's going to be one of their proxies.
Yeah.
But they were privately valued at potentially as high as $7 billion. So they also have the capital and the capacity to compete, which means that Beyond Meat doesn't have a lot of pricing power in the market. Not to mention all the other small startups. Then we can look at another company. So Beyond Meat was kind of the first mover advantage. Okay. Hannah, do you remember the company LaCroix?
Of course I remember LaCroix. I have a LaCroix in my fridge right now.
Well, is LaCroix as hot in the streets here in 2022 as they were when they burst on the scene, I believe, around 2017?
Definitely not.
Definitely not, right?
No.
So after the IPO, Beyond Meat went up 840% after their IPO. They're now down considerably from that.
Okay.
National Beverage, the makers of LaCroix, under the ticker symbol Fizz, had a very similar story.
Okay.
And are down to $4 billion in their market cap. After, beverages are a different gross margin. They don't have the gross margin problem for fizzy water. But the same type of story here, as a lot of hype, a lot of rollout, maybe not quite the persistent demand or the capacity to fight off competitors, leads to LaCroix not quite having the same type of market share. Costco has their own fizzy water. PepsiCo has their own fizzy water. All these companies have their own fizzy waters. Same thing happening with these plant-based alternatives, both from the young upstarts and from the existing Tyson, Nestle, JBS legacy competitors.
Gotcha.
Market consolidating. Then you've got a company like Chipotle introducing their own meat alternative that they're making in-house.
That's right.
So they're not even going to an outside provider. They've got their own, and they've got a $42 billion market cap and a whole heck of a lot of distribution. I would argue more than someone reliant upon restaurant partnerships.
That is totally fair. Wow. Very comprehensive comp section.
Thank you.
Yes, let's move on to the meme factor, where Aaron and I debate the memeability of a company. We rank it on a scale from 1 to 5. 1 is negative memes, 5 is all the positive memes, and 3 is completely neutral. We feel nothing. I don't feel nothing when I think of Beyond Meat.
Don't feel nothing.
Don't feel nothing. I'm gonna go, man, there's all the environmental shit that like people get so hyped up about fake meat. And then I think more of the memes are pretty gross. So I'm going 1.8 for Beyond Meat.
Wow.
Yeah.
Wow. So I have to think about this. So this is actually one of the hardest ones for me because, like crypto, the vegan vegetarians are these foaming at the mouth, will not fucking stop talking about it nerds. And that's the undercurrent of a good meme factor.
Sure.
So I would actually argue here, the meme factor behind Beyond Meat currently sits at a 3.9.
Oh.
Because of everyone being, say no to meat, save the cows, eat more chicken, eat more processed soy. But I have a suspicion that that will fall precipitously in the next 12 to 18 months.
Okay. Well, we will come back to this video, see if you're right. But before we move on to the bull and the bear case, let's talk about our sponsor, JetStore, one final time. JetStore offers storage systems for private cloud hosting, video surveillance, Internet of Things, AI, machine learning, edge computing, data archiving, HPC, media production, medical imaging, and even flight simulations. They can help you with all of your data storage and cloud management needs. Check them out at jetstore.com. They've been a friend of the Rundown for many, many months now, probably over a year, if we're being honest.
I think it's close to 2 years, actually.
Whoa, what?
Credit to them.
Credit to them. It's still mind-blowing that we've been doing the Rundown for that long, but thank you again to JetStore. Linked below. All right, on to the bull and the bear case.
I think the bull case has to start with your belief that they can have some form of a manufacturing or technological breakthrough that would allow for them to sell their products at a considerably lower expense and stronger gross margin. You have to believe that that has not yet been discovered, has not yet been developed, but will be developed in the future.
Just gotta believe.
And you can't argue that it will be because of scale, because their scaling is slowing.
Right. Right. Yes.
So you have to believe that that's possible.
Yeah.
Then you have to believe that demand will continue to grow primarily through the lens of climate impact because the health impact is not there.
Sure.
By my estimation.
Yeah.
You would be arguing that this type of decision in an inflationary environment, in an environment where we actually have a semi-major geopolitical conflict playing out with the potential for more, that people will be saying to themselves, better prioritize the climate
Than my body.
in a world of geopolitical conflict.
That's fair. All right. Interesting bull case. Not sure if I'm quite compelled.
If I'm missing something, let me know in the comments. If you're still bullish on Beyond Meat, let me know.
The bear case?
I think I've spelled it out. They don't have the gross margins to be a business that sustains itself. I'm like right on the fence of actually calling, like I think there could be a bankruptcy in the future.
Whoa.
But like that's how I'm thinking about a company like this.
Okay.
We've covered, way back, J.Crew, Hertz, these type of companies that structurally don't make money.
Yeah.
And people are kind of moving around deck chairs on the Titanic.
Yeah.
And it feels more like that than like some of these other companies that I still think have structural elements of positivity.
Wow. Well, very interesting breakdown today. I gotta tell you, I was intrigued. We hope you were too. And we'd like to shout out a commenter from a recent Rundown. On our Axie Infinity video, Glenn Ford, what's up Glenn, said dope video. Thank you. Appreciate the kind words. And if you haven't subscribed yet, please do so. And don't forget to smoosh the like button. See you in the next Rundown.